just few items that are quite important. Class, as you are well aware, time is of essence. Please, may I plead with you and beg you, as I've been doing for the past weeks, to get on with practice and to make the most of your practice session. It is very important that you move quickly because you are no longer at the introductory stage, at the foundational stage. You are now at the advanced stage. And at this stage, you should be able to actually move quite quickly. So, if there is anything that you are not understanding, it's very important to locate which learning unit that particular notion or concept is found, and to revise and to study that particular learning unit, just to make sure that you are not falling behind. Because let me tell you one thing that can be a bit frustrating is that if you are doing learning unit 5, and learning unit 5 is the longest chapter or the longest learning unit for this module. So if you are going through learning unit 5 and there are things that you are not understanding, there is a fair amount of chances that there's a lot of things you are missing, from prior learning units. So just go back, revise and understand what you are missing. And you also have me, you can ask questions, and let me help you, and let me tell you that this will be the best time to do that, because you won't have time, as much time, if you delay anything from this point onward. If you are delaying anything, you are basically deciding that you are not going to do well in your final exam. And that will be a bit of a pity. Right. So one of the things that I'm going to do, I've sent you lectures. I've sent you part 1 and part 2 lectures. I'm going to add also another portion of the for the ABCs. I'm going to send that to you, very important. And I've also sent you also other recordings I've shared with you for practice. The reason why I want you to have all of this is to allow you, when you are doing your actual practice, to do well, right? So if you would just give me a second, let me just sort something on my computer just to make sure that I do not receive anything, any message during this time. All right. So as you can see on my screen, I shared with you. So first thing first, for your test two, um, one of the things that I've noted is that many people were not practicing, and that's a pity again. I do not understand. Given the many times I've emphasized on you practicing, many of you are not practicing. What some of you are doing is basically, just touching a bit here and there and hoping that that will be enough, and that's not right. That's really not right, because at the end of the day, remember, this is your own studies, and I wouldn't want you to jeopardize your studies, right? So one of the other thing, with regards to your task 2 that you wrote, is that I've provided you with the solutions, and I've asked you to go through it, and I'm sure many of you have done that already, and to see where you went wrong, and what you do not understand, please, to bring it forth, right? Question 1 was a bit simple, quite simple, and I've provided you with the potential answers to question 1, right? but the logic should be the same and should be understood by everyone. Question two was the longest question. Yes. However, one of the things that I found is that majority knew how to structure question two, which is really, really a good thing. I was really pleased with that. So majority of you knew exactly how to structure question two, knew that what you were required in terms of the cash cells, the credit cells, and the structure that was given to me was quite impressive to see that many of you understand this, right? Again, but I only got a few misses, right? Because some of you would focus on the cash sales, but will forget the cash purchases and the credit purchases, you see. But I would say that in majority, many of you knew how to do this, the structure, the structure. The only issue was on a few calculations, majority of you made few mistakes. And this is telling, what this tells me is that you understand, but the lack of practice, some of you are not practicing enough to even understand when you are making a mistake. You see, you become very good when you practice so much that you can when you double check your work, you can clearly spot where you went wrong, right? So there are things, for example, I would say here is that, for example, even numbers, you would get an amount like this one for the cash purchase of April, is a 6,930, sorry, 693 thousands 600, right? But what I got is that, for example, someone will forget the 600 in it. So this is just an example, right? At the top of my head, I'm trying to remember all cases, but yeah. But just to give you an example, so you will get minor mistakes here and there, numbers that are forgotten, calculations that are forgotten, calculations that are left aside. And this is really telling of there is not enough practice. You need to remember that this is a skill. This is not just knowledge, right, that you are acquiring, but it's also a skill that you are acquiring, financial skill, right? Okay, question number three was quite straightforward. The majority of the class did very well on question number three, as well as question number four. Well done. But it's question number two. I don't know if some of you, and that's the problem, is that if you're not practicing enough, a question like this, you will find it to be too long and you make quite a lot of mistakes. And the question was done on purpose to see if you are practicing, right? Now, listen, your final exam would be something else, right? And I just want to remind you that it's not going to be a pleasant experience if you are not taking, if you do not understand, if you're not aware where we are. And I just want to remind you. So I'm going to touch on on a couple of um, points that are important. Everything has been covered, right? I've sent you lectures. Some of you have shared with me that you've read the learning unit, which is awesome. But like you heard from me, I said, are you practicing? Thanks. Thank. I'm pleased that you have read the learning unit, but are you practicing? At this stage, I'm not interested with you reading. I'm interested with you practicing. Are you practicing? Are you taking the examples that are provided to you, the exercises that are provided to you, and are you practicing? Right? So very important. So this is already covered, and you can have a good read at this. I would like to jump quickly on something important here will be the actual valuing of inventory, right? Remember here we are covering the inventory valuation, right? It's just valuing, giving a cost to your inventory, right? What is very important, what you note you noted here, straightforward, is that in your learning units, one, we touched on this, right? And it was part of your task one. You had a question on this, on the FIFO, right? And on the, like I said to you, the learning unit one was an introductory learning unit, and we will get the chance of diving deep into each of these concepts, right? So one thing that is very important here for you to remember is that there is a difference between an inventory system and an inventory valuation method, right? An inventory system that talks about a system, how you record your inventory, right? What is coming in, what is going out, how you record, right? The cost of your inventory, right? And your actual inventory valuation when you are giving a value, you are giving a cost, right? Remember, the first in and the first out is very important as a valuation method, right? You have a valuation method, first in and first out. It says it, whatever comes first needs to be the first to go out, right? And then you do have your weighted average, which gives you weighted average. So I've provided you this. You saw it's very important. It makes the distinction between the inventory system and the inventory valuation, right? You have two methods that we're going to be dealing with. We're not going to deal with the LIFO, which is the last in first out. That method is no longer in use, right? Internationally, this is not good standard, right? But it's first in first out, as well as the weighted average, right? When you're looking at the perpetual, this question was asked to you: what is the difference between the perpetual inventory system as well and the periodic inventory system? And you had that as a question. Now we're just basically diving deep. Remember that in the perpetual, we need to know at all points, we need to know the cost of inventory at any time, because it's the perpetual all time, right? So you need to understand that there is an inventory account, and that inventory account, inventory costs are charged to everything that is happening, to production, cost of sales, cost of goods sold. We charge. Remember that we debit that account every time that we bring in inventory. We debit that account, meaning that there is inventory in that account, right? And every time we take from, we use inventory, we basically charge that account, right? We charge that account, right? And then you do have the periodic. The periodic is as it says. It is over a certain period. It could be a month. It could be 3 months. It does not matter, but over a period. So we would not know the cost of the inventories at all time, but we will know at the end of a specific period. So all this that I've just shared, I'm very unhappy because this is theory and you should know theory. What is important is to go to an example. An example 5.1 is well detailed. Please don't be overwhelmed by the mess here. Remember that the lectures covers it properly, as well as myself. I covered it in the tutorials as well as the lectures, right? I've covered that. But what I want to point out is this: in the lectures, when you go through the lectures, you will get this. I want to point out this. Patrick, what is the purpose of this? What do you want to remind us? I want you to be able to do this comparison by yourself. So when you have practiced this example 5.1, you need to be able to do all this by yourself without looking at your textbook. It is the same question. It is providing you all the valuation methods as well as the valuation systems, right? So you have a perpetual system, you have a periodic system. You see, perpetual, periodic, right? Within the perpetual, there is the FIFO and the weighted average. All right, so that you can see clear comparison between these two. As you know, the FIFO, first in, first out, look at the way this is properly structured, right? For the perpetual, because we need to know at all time, perpetual, we need to know at all time. So we have the purchase, a purchase column, a issue column, meaning that purchase is what is coming in. When we are buying inventory, it's coming in, right? So that those are your purchases. And then you have your issues. Issues meaning basically we are selling out inventory or we are using inventory. It does not matter. But inventory is going out, right? We charge the inventory. We credit the inventory accounts, right? So very simple. Purchase, issue, balance. Purchase, issue, balance. Purchase, issue, balance, right? At the beginning, what is the opening? In this example, the opening is 2,000 units, right? So you have 2,000 units. Sorry, the transaction, the purchase on the day 2 of the month. All right. So, but the opening balance was 5,200. You will read the question. So, what I would ask you is to read the question, understand the question, because here in the question it said clearly there were 5,200 units with a selling price of 3 rand each. Right. After marking up these goods up with 20%. So that 3 rand is basically a selling price. It includes the markup. So if they tell you the markup is 20%, I've said that already. It is in the recording. So if it's 20%, you say that 3 rand is equivalent to 120%, right? Because we add a markup. So the actual cost is 100%. That's the actual cost. So when we're doing a markup, we're adding onto that cost 20%, which is 120. And I've shown you how to do this example here so that you can find the actual cost. What is the cost? The cost is 2.5, right? So you take 3 rand, multiply by 100, divided by 120, right? Easy. Easy peasy. All good, right? So there was an opening balance. And if there is an opening balance, as you can see here, the opening balance at what cost? At the cost that we just calculated, 2.5. So the opening balance from what was provided to us, the selling price, we managed to get the initial cost. And with that initial cost, see how easily. So we know that whatever is there, the 5,200, it's at an initial cost of 2.5, right? So I'm repeating myself here, but the reason for doing this is just to show you that you need to be able to do this. You need to be able to do all these calculations and compare, and they're very easy. It's just a game. Once you understand, it's a game, right? But on the second, they say we purchase more, 2,000, right? So you will have the balance on the second day will be the 5,200, right? At 2.5, at 2.5, and the 2,000 at 2.75. Now, if you are issuing something, so they say to you that we sell 6,000 units. We will start with what came first. What came first was what? The 5,200 units. So they say you need to sell 600 units. So not 600 units, 6,000 units. Sorry about that. So 6,000 units minus the 5,200, right? Because we need to start with what came first. We finish everything that came first, then we move on to what came on the second, which is the 2,000 unit. So if you take 6,000 units minus 5,200 gives you what? 800. So the 800 we will find that 800 from the batch that we bought on the second day, isn't it? We bought 2,000 on the second day. So we will take 2,000 at the cost of 2.75, right? So what will be remaining? So the balance on this day, on the 8th, will be 1,200 units at 2.75. Now, this is very simple. The reason why I'm taking my time to explain this is that if by any chance somebody is just listening to this or looking at this and say, I do not understand what this is all about, then you need to give me a call. You need to ring me. You need to write me and to say, sir, I'm in a difficult situation. I'm not understanding this, which is very basic, so that I can have a one-on-one session with you before your exam. If you do not reach out to me, then that means I assume you understand because it's simple. Yeah, but I'm just, for the sake of anyone who would be at this point lost, then give me a call, right? So your case will be different and differently handled, right? Okay, so that's basically the same game here. Purchase, what is coming in, what is going out. Purchase, what is coming in, what is going out. For the periodic, you will compare also these two, right? This is the weighted average cost method, and this is the FIFO method, right? Very important again. Take your time. Look at this table. How do we go about when we have a periodic? Remember, a periodic, we would not know at all time. We would not know at the same time as a transaction is taking place. We would not know. So that's why we need to do the purchases on their own as well as the sales on their own. We separate the two. Everything that we purchase, remember the 5,200 unit that was the opening balance, right? And the other purchases that were done on the 2nd, on the 13th day, on the 18th day, and on the 20th, we're going to put them in one table, right? With their different prices so that we can know the total value. This total value we would know at the end of the period because remember, this is periodic. But how much did we sell? We sold on the 8th 6,000 units, and on the 24th we sold 5,100 units. Okay, so what is important here to find is that what is the unit price that we sold at, right? We know it was provided to us. We have a unit price. We will use that unit price and we will get the total value. So now we have the total revenue minus the total cost. And that's the purpose of this, is that we can take the revenue minus the cost. But in this question, for example, they will ask you about the closing inventory. So when you are looking at the closing inventory, you must know what was not sold, what is remaining, what is the closing inventory. You know the closing inventory. You do the opening inventory plus whatever was bought during the month minus what was sold. Okay? Minus what was sold. So you will take this 13,700 to make it easy, minus the 11,100, because that's what was sold, that's what went out, right? We will have 2,600. 2,600 is what was sold. So, but how do we find the value of this? We will have to go at the last, we will have to find from this 2,600 unit, okay? What was the one that was what came in last, right? What came in last was the 1,500 units, and we know the cost of it, right? And then from this 1,500, there is only a 1,100 that is remaining because if you look at these arrows, I'm pointing to you. The 2,600 you need to figure out from the last. From the last. Remember, it's a closing balance. It's a closing balance. So we will use the units that were bought. So this closing balance is constituted of units that were bought on the last day, plus some units. How many? 1,100 that were bought on the 18th. You see, the 18th is close to the last batch, right? So you will first make use of the last batch that came in, and then you will go look for the remaining on the previous batch to this last batch, right? So this is quite technical, but it is important. The calculations are here. It gives you a value of the closing balance, right? So good question, different method, different systems for you to be able to compare. Like I said, if there is something that you do not understand at this stage, please reach out to me. Right. And we are at a very good point here. The other thing I would like to point, so all this is for practice. Please practice. Start with the first example, and if you understand, practice on your own. This is quite easy. Unfortunately, sometimes students do not have the time to practice this. This is what I am talking about: the economic order quantity. The economic order quantity, whatever business you will be doing out there. Because sometimes, if you do not understand the importance of this, you will be like, "Ugh, all these terms." But always ask yourself, why am I studying this? Because I want to become an entrepreneur. I'm studying this because if I need to start buying things, I need to minimize my costs. All right? So the economic order quantity is the best way for me to figure out what will be the best way to minimize the cost of holding and the cost of ordering, right? Because whatever you're buying there, remember that the cost of it's not just the cost of the inventory that you're going to pay. There's other costs that are involved, right? Carriage, relish, transportation cost. You know all these things. But also there is two important costs there, which are holding, right? And the cost itself of ordering, right? The cost of ordering and the cost of holding. Right? So I repeat that in the lectures as well as in the tutorials: the cost of ordering, the cost of holding, the cost of ordering, the cost of holding, the cost of ordering, the cost of holding, the cost of ordering. Why am I doing this? Is to show you that these are very simple concepts. You should not be fazed by the fact that it says EOQ. Then you are confused already. EOQ, this sound like very difficult things. No, it's not. The economic order quantity is just basically the quantity. What quantity should you buy? All right. What quantity should you buy that will minimize the cost of holding and the cost of ordering? All right. And so there is a calculation for it. There is a formula for it. Very important. I covered that in the learning unit. This is the formula, a very simple formula that allows you to know exactly what is that quantity that I need to order that will allow me to minimize the cost of holding and the cost of ordering. Simple. That's all. So, but this is a good example because you will be asked thus to do this calculation, but you need to understand why you are doing these calculations, right? How much orders do you need to do in a year? So, okay, I need to do maybe 19,200. Okay, 19,200. Every time you order, what is the quantity that you put in that one order? Let's say maybe the quantity is 800, right? So you have 800 items in one order. So you will be able therefore to say my annual requirement is 19,200 divided by 800 per order. It will give me 24 orders that I need to do within a year. 24 orders. Now, what is the cost of ordering per order? It's 450. Ah, okay. So I will take my total number of orders, 24, multiplied by the 400, 500. 450, sorry, 450. What am I saying? 450, which gives me 10,800. So 10,800 will be my annual ordering cost. So I know. So if I need to order the shipping and all that, all this will amount to 10,800 for my business, right? What is the average quantity in inventory? So you take a quantity per order. Quantity per order. Remember the quantity per order in this example is 800 divided by 2. gives you the average. Average is always divided by 2 somehow, right? Okay, let's move to the annual holding cost. So to get the annual holding cost, you will use that average quantity in inventory. What is that average quantity? It's 400, right? So that 400 multiplied by the annual carrying cost. Remember holding cost? Annual carrying, to carry cost per container would be 6 rand. So then you say 400, the average quantity in inventory multiplied by the 6 rand will give me 2,400. I hope that that makes sense. So, but then how do we know now the total cost of inventory? The total cost. Ordering cost plus holding cost. Ordering cost plus holding cost. Simple. So we have the ordering cost 10,800 plus the 2,400 will give us a maximum of 13,200. So that's the total. That's the total, right? So, but how do we maximize? We don't know if this will be the maximization, the minimization of cost. Will this allow us to minimize? When you see it in this table, we will look at different order size. So you look at different order size. You look at different order size. And with different order size, it will tell you where you will get the lower total annual cost. All right. So this table is for an example to show you with the different order size, So the more you order, let's say maybe you are ordering all at once, the 19,200. So you will only do one order. Do you see? You will only do on an order. It will minimize the ordering cost because the ordering cost is only 450. It will minimize the ordering cost, but it will increase your holding cost, right? It will increase your holding cost. Do you understand? So minimizing this increases this. Minimizing the ordering cost increases the holding cost. Minimizing the holding cost increases the ordering cost. Do you see that? So, but how do we strike a balance? That's the purpose of this. The purpose of this is to find which points do we strike a balance and where we're going to minimize our costs. And this is the formula that allows you to get that, right? This is the formula. 2 is a constant. D is the annual demand or requirement, right? We know that. O is the cost per order. That is for cost per order O. O for order. O for order. H for holding cost. Simple, all right? But P is the price, the cost price per unit, right? P. P is the cost price per unit, and I is the interest. Sometimes there is no interest, so you will need, for example, in this case, the interest is not there. So, for example, for if you are taking a debt to finance, then you need to take into account the interest. But if you are not taking a debt, right, to finance this, then the interest will amount to 0, which will only simplify the formula to H on the denominator, just like you see here. Only the 6 here for the example, right? Because there was no interest. So these are quite important points that I'm touching on. Please practice. All right? Please practice. So I'll send a nice recording for the apportionment of overhead, but in all, it's there, right? I've already sent it. Sorry. So what did I say? I've already sent, right? But again, the reason why I'm putting it this way is so that you can see for apportioning the overhead. Remember, the overhead is the indirect cost. You remember that? Do you remember the 3 musketeers? You'll always remember those 3 musketeers wherever you go as an entrepreneur. because it's always about the direct costs, direct labor, and manufacturing overhead or indirect costs. Manufacturing overhead is your indirect cost. So the purpose is, how do you apportion that? How do you reassign the costs, the indirect cost, to the actual production? So if, for example, you are doing a production, right? For example, in this case, the different services department. So you have the service department, and the service department, what do? They offer that indirect costing or assistance, right? But the production itself is constituted of only two departments: mixing and bottling. All right, mixing and bottling. Let me make it bigger. Do you see here? Mixing and bottling. These are the only two. We will need to take these costs and up and assign them to the actual manufacturing. You understand? Because all this department, administration, it's assisting the manufacturing. Human resources, people. Obviously, we need people in our production. The plant and the facility. Obviously, we need the plant and the facility. It is important for us for our production. So we need to be able to allocate the service cost to the production department. That's the meaning of this. So I hope now you understand. The meaning of this is that there is a direct method to do that, where you are apportioning the cost directly to the production department. So you take, for example, the plant and facility, you apportion it directly to the mixing and bottling. All right. So you need a percentage. What is the percentage of the plant and facility that will go for the mixing? What is the percentage of the plant and facilities that goes to bottling? What is the percentage of human resources that goes to mixing? What is the percentage of human resources that goes to bottling? I can go on again. Do you want me to go on? What is the percentage of administration that goes to mixing? What is the percentage that goes to bottling? So this is a direct method. So you are sending it directly. But the step method accounts for the fact that, because in the direct method, there is no service department, inter-service department allocation. So facility is not allocating anything to human resources. Human resources is not allocating anything to administration. Wait a minute. Is administration not made of people? So you see, a better method actually than the direct method then would be the step method. Because with the step method, we can apportion some percentages to the administration. So for example, for the human resources, obviously people, every department needs people. So the human services will apportion its cost to the other four departments, including the other two service department as well as the production department. I hope this makes sense to you. Quite easy. Do you understand? So they will ask you and they will tell you that actually the number one in terms of allocation, right, sequence, the number one will be human resources. So human resources will be the first one to allocate to the other department. The second one will be administration. And the third one will be plant and facility. That's why you see, we start with human, then we'll go to administration that will allocate to the plant and facility as well as the production department. Making sense, right? And then the plant and facility will allocate its cost to the other production department. It's a game, right? It is really a game, but we want you to understand, because you know cost, you need to be able to allocate this cost properly. Another more actually a good one would be the linear algebraic method. Very important. And the linear algebraic method, which I discuss further, is about percentages, right? So um, you have a company that has two production departments as well as two service departments, right? This is the example. There will be a percentage distribution of the service of each department, right? So 100% will be allocated this way, will be distributed this way, right? Service one will allocate 40% to production one, 50% to production two, as well as to the other service department, right? Service department two will allocate 50% to production one, 30% to production two, and the remaining 20% to service one. So that's how we go about finding. So we take what is unknown and we get what is unknown. A little bit of math there, but very easy for you to understand. It's just a matter of substituting. So we use what we know to find the unknown. I hope that makes sense, right? So the actual recording that I said I was going to send, the last one, because remember, it's not of my wish to bombard you with quite a lot. And again, at this stage, we have about 5 minutes remaining. It's very important for me to emphasize this, and which I have emphasized again. Don't let these recording pile up. Then you basically, it's game over for you. It will be game over for you when you're letting these recordings pile up. These recordings should not pile up. And that's why I even ask you, please, can you listen to this recording as soon as you can and as fast as you can? As soon as you can, as fast as you can. I hope that this is clear, right? You can do the speed you have on our YouTube channel. You can speed up the recording. You can put the speed at 2 or at 1.5 or at 1.75. It does not matter. You can cover quickly a long recording like this one in just 15 minutes. You cover everything. All right? Okay, so I think that I will take a break here. I would like to hear from you, and hear how far you are with your practice. And please let us communicate. It has been quite a difficult situation where some of you, the majority of you, are not communicating, right? I'm only asked for assistance, unfortunately, when it is too late, and that's not a good thing. So I'm stopping sharing, and I'm going to basically stop the recording here. But please communicate. You are writing very soon. It's only a month. It's only 4 weeks, and you should be ready by then to ace that last paper. If you do master learning unit 5, learning units 6 and 7 are very short. They are only a continuation of learning unit 5. So if I tell you, if you master learning unit 5, therefore you are in the green zone, right? You're in the green zone. You are ready to tackle your exam. Learning unit 6 and 7 is only few concepts building on learning unit 5. I trust that this is clear.